Hello there and welcome back to my channel. In this video, I'm gonna show you latest my recent project which I just completed. So yeah, just let me go to the builds and go to the GatiGo page. So yeah, yeah, I just completed um, yeah budget vs actual model where I made these four models. First one is the KPI dashboard. Second one is analyst dashboard, and third one is the budget with actual dashboard, where we just calculate the variance and how much variance we have and all that. Okay, and yeah, last was the budget model. Basically, we prepared the budget with the proper assumptions driver. How what is leading to which number we have, what are we assumed and what we how made the budget. Same goes to the PNL also. So this is the quarter one budget and PNL of financial year 2026. So yeah, so today I'm gonna showcase you all in these models. Not this actually. I'm gonna show you this KPI model, and it actually has everything. It has the assumptions, budget vs actual analysis, and much more. Okay. So yeah, this is the model which I just created. So I'm gonna show you here. Also, more models are coming soon, so make sure you stay tuned with it. And yeah, so I also shared this project on my LinkedIn profile, so you can just go and follow up me there. You can just connect me there, and you can also provide any feedback you have, any suggestion you have, you can also provide me there. Okay, so yeah, make sure to connect with me on the LinkedIn as well. Also, I gonna add this that this is an academic project, and all the figures which we have took in our dashboards are not actual. Basically, these all figures are hypothetical for education purpose only. Okay, so yeah, make sure to keep this in mind. This is not an actual startup. Basically, I just can give you a pretty brief intro about the GatiGo. Basically, GatiGo is a carpooling platform. Okay, and you can also view the landing page of this project. This is what the landing page looks like, and yeah, it's a pretty beautiful landing page, I guess, uh, for a startup. Okay, so also a big thanks to F9XR team for creating this landing page, for coding this landing page. So yeah, a big thanks to them. So a short intro about GatiGo. GatiGo is basically a tech-driven carpooling platforms that connect drivers who have empty seats and travelers who are going in the same direction. Okay, pretty simple, straightforward startup. Okay, nothing new, nothing unique. So you can read it out here. Yeah, I will give the link of this project page in my description of the video. You can go there. You can read about this GatiGo, and you can understand how this business works. I have also attached the pitch document here, and I'll recommend you reading this doc version also. It is more in depth in comparison to this pitch document, and yeah, you can also download all the models, okay, which you have prepared, and all the more models I will be creating over this project will be uploaded here. So make sure to stay tuned, and yeah, make sure to connect me with me on LinkedIn. So yeah, these are some models I have created. So today I'm going to showcase you this KPI dashboard because it has everything. It has mix of all these things. I think not analysis dashboard. Basically, I have added here simulations. Also, many simulations I have added here. I'm still working on it, so I'm not gonna disclose much about it in this video. So yeah, I will in the later video you're gonna see this analysis dashboard too. Okay, so let's focus on KPI dashboard. It has everything: budget based actual, various calculation, unfavorable, favorable, and quarter one budget, PNL, and with their proper assumptions also. Okay, so you can download it here. No, there's no problem. You can use it this model as well. Okay, so yeah, this is the what we're gonna see today. So yeah, let's start. Let me just uh, show you my Excel. Let me just go to my Excel project here. Yeah, Excel. So yeah, this is the Excel file I was talking about, the KPI dashboard. On top you can see is the GatiGo quarter one of financial year 2026 KPI dashboard, actual vs budget analysis, and yeah, this is the KPI scorecard here. You can see it here. This is the chart data. I was actually preparing the chart of this, but unluckily I'm still learning how to create charts and data and visualize data in the Excel. So yeah, I didn't work much on it, but yeah, I just created this cost breakdown, actual cost breakdown. You can see it's from this chart for cost category and the quarter one actuals we have taken here. So you can see the most of our cost goes to um, the driver incentives and the salaries. Okay, then on the third place is marketing, and next is this uh, yeah, cloud plus office, because it's a tech based startup. So we have to yeah take it in mind that all the cloud and hosting expenses we have to keep, right? So yeah, that also has a huge expense for us. Next we have this um, support and all the legal expenses, and then I guess this is the uh, interest. Yeah, so this is the depreciation and all interest, and last is our gateway and reference expenses. So these are some expenses of the quarter one, breakdown of the expenses for quarter one. So yeah, let's go to the KPI scorecard. Basically, these are all the other KPIs which we have to take in mind. So okay, first of all, I'm gonna also introduce you to all the sheets we have here. First is of course this KPI dashboard. Next is the variance analysis, all the how much variance we got into comparing the quarter one actual to the quarter one budget, and what is how much variance we have, the percent of the variance, and it is unfavorable or favorable. Whatever is red is unfavorable for us, and whatever is green is favorable for us. And then why it happened? Business reason, with a business reason, not an accounting reason, business reason, and how we can improve it. I should add how we can improve it, but I didn't add it here. But yeah, we can assume that why it happened. So that's the thing I have added here. I have tried to add here. Okay. So because this is the this is the main thing, right? Anyone can calculate number, but explain the business reason why it could happen, why it might happen is the main thing we have to do, so that we can improve our our analysis. We can improve. We can suggest our management with how they can improve their decision to improve their metrics. Okay. So yeah, next is this is the budgeted PNL of the GatiGo for quarter one, and yeah, you can see. Also, all these numbers come from the assumptions you have to in. This is the assumptions drivers. This is basically the inputs. How we assume that, how we populate this number is based on this all the assumptions we have took here. So I'm gonna explain in detail in that also. And then this is the actual PNL, which really happened after quarter one. So this is the quarter one PNL here of January, February, and March, and the total of quarter one. Also, I have the assumptions, actual assumptions, how what really happened that derived up to the this all numbers. So yeah, next is just about this workbook, and this is all the document and created. You can read it out. Okay. So yeah, let's go back to the KPI dashboard, and this is what the KPI dashboard looks like. So yeah, the top KPIs we have is the of course the total rides, because it all depends on ride. Being a transport-based business or like carpooling business, the main KPI is the total rides. If we have, you can see the January actual was 4,680. In February, it increased to 4,800, and in March it went to 5,980. Then quarter one actual was summing this all up, we got 15,460, whereas the budget was only of 18 to 40. The variance occurred here is 2,780. So this is the variance. You can also see here. Sorry, not in this. Yeah, the budgeted PNL. Total rights. Yeah, total rights with this. You can see total rights quarter one budget was, we assumed it to be 18 to 20. Compare, but the actual was only in actual pen, you can see it's only 15,460. It only 15, 14, 460. So that's the variance came to us, and it was actually to 2080. So assuming, so let's go to the assumptions here. So what assumptions we took here? First, covering the budgeted assumptions. The working days in the month is 26. In January it's 26, February is 24, and in March is 26. Unit days. The average rides in January was 210. We are assuming this, okay, and 210, and then 240 in February, and then in March is 270. And average ride fare was 150. Of course, this is same over the year. It doesn't change, and the commission rate will be of course so 15% already fixed. And the corporate clients we had in January was 5. In February we have 6, and in March it increased to 8. Okay, the contract was same. The corporate contract revenue was same across all the 3 months, which was 24,000. Yeah, 24,000, and the premium subscribers were 350 in the month of January. February it should be 450, and in March it should be 550. The premium price, of course, is same across the all months, and yeah. So this is what we took as a budget. But what actually happened is we only got 26 rides. Yeah, yeah. So we actually met the sorry. This is not the rights. This is actually the working days. This of course is same. Is same. And how we took the how we calculated the working days is just we excluded all the Sundays and the public holidays in month of in all 3 months. Okay, average ride was 180, and and in budget it was only 210. So yeah, that's a huge decrease in that. In February we assumed to 240, whereas in actual was only 200. Same goes with the March. We assumed it to be 270, but it went to only 230. So yeah, launch was pretty slow in January, though we actually could have had a good pickup, because if you see, we assumed to be 270, but we are still into 30th March. So yeah, we had a good pickup, but still launch was pretty slow, and it's acceptable, because it's a newly based startup. We have no goodwill, we have no trust in the market, so it will take time to acquire more customers. But yeah, fact is that it's increasing. Numbers are increasing. That's actually good. Of course, rides fare other average ride fare is same. I mean, there's not much increase in that. Just because we had a good demand, we increased it to be 255. This is actual assumptions. And commission rate was, of course, fixed of 15%. Corporate client, it was in January 2024, in February 5, and in March 6. Whereas in budget we conclude that it should be 5, then 6, and then 8. It was not fulfilled. So it was slower than what we thought. And it goes with, of course, the corporate client. It was fixed from January to February, though it increased to 2800, as a big client joined us in March. So yeah, it increased. So that's good actually. Premium subscribers were 280, 350, and 420. And comparing it to our budget, we had 350, 450, and 550, uh, which is actually not good. And yeah, so that's a problem. And next, of course, the premium price is same. So that's same across the whole thing. So yeah, this is the assumption and the budget. Okay. So moving on to the P&L of the actual P&L. So our monthly rides were this much, and then you can see total monthly rides were this much, and if we compare it to budget, it should be this much, 5460. So which is a a big problem over here. You can see not a really huge variance here. If you calculate the variance here, um, I think I didn't in this sheet I didn't calculate the variance of this thing. But yeah, we can just calculate the revenue of this. And actually, if you see the formula here, it's actually really confusing. It could be really confusing to you, because it's net of GST also. We are also netting off the GST here. So GST was, if you see here, it was 18% per ride. Okay, it was a and TDS. It's the corporate fees basically. Tax is deducted from source. It's 10%. So we are deducting the GST also from it. We are netting off the GST also. So you can see the formula a bit complex here, but it's pretty simple, guys. We are just netting off the GST here, which is 18%. All right. Yeah. So let's go to a KPI dashboard. We have the revenue here. Yeah, the total revenue from the ride commission. Wait a second. Yeah, ride commission 89,000, and summing this all, we get the quarter one total of the revenue ride income netting of the GST, which is 2,99,809. And you can see this number here. Ride commission, we quarter one actual was 299,809. But the budget we decided, you can see this is the budget, and quarter one budget was 3,47,797. So there was a variance of 47,987 here, which is a 30% variance, and it's actually an unfavorable variance, because our budget was more and actual was less. So it is because, of course, we got a very less rides in January. You can see we already discussed here. In January, our rides were really slow. You can see our what we compared, it should be 210. It was only 180. So you can see here, we expected 210 rides per day in January, but the start was really slow, and that really affected the ride commission, because it couldn't match our because we didn't get this much ride. So that's what really affected the our ride. But this means we get 2 weeks for February intercity revenue instead of 4. So yeah, also ride commission, we also have to see the intercity ride revenue here. So in January we didn't launch this, actually, the intercity ride, so it's 0. In budgeted it is also 0, because we are planning to launch it in intercity ride revenue from February, I think mid February. If we go here, yeah, so you can see actually this was a bit late, 2 week late. Okay, so being January we didn't plan to launch, so in February we are launching. So we only got 60 rides, where and this is the budget, and but this is what we planned that we will get, but we've only got 40 rides. So yeah, you can see the feature launched in mid of February. So it was actually late, 2 weeks late. So that's the reason why it's we got less intercity ride, and this directly affected our intercity commission revenue also. So which also affected our ride commission. So yeah, this is what is how uh, we got a really unfavorable ride commission revenue. Second is of course the same thing I shown you right now, intercity revenue. We expected it to be 17 to 80, but actual was only 11,520, which is a variance of 5,760 or 33.3% uh, variance, which is actually unfavorable, and it's actually high. You can see 33% is really the, I think, highest here if we exclude the gross profit, which is 57.1%. So 33%, 33.3% is really high, and the reason is that we are late. We were late actually. Okay, it went live on 15th February due to the Google Maps API integration delay. So there was some delay in the Google Maps API integration. So it went delay, and we got I think in mid Feb we were launching. So that's why we couldn't cover the much rides here. I think we've only got 40 rides something, right? Yeah, we've only got 40 rides in February because we were late. But actually how we expected was 60 rides. So it was a late start, but that's the reason what affected our intercity revenue. Next is the corporate fees. Corporate fees is was we expected was 410 4,10,400, where actual was only just 3,45,600. So the reason being that, of course, how much corporate ride we expected was 5 in January, but we only got 4. Same goes with the March, February, March. So that's a really good variance in high variance, which was over 64,800, which is 15.8%, and it's also an unfavorable variance, where like the budget assumed that we will get 5 corporate clients in January, but we only have 4. Our fintech company slipped a quarter two deal. Okay, so yeah, basically there is a one fintech company which has slipped, which has to deal with us in quarter one, but it went to quarter two. So that revenue that we didn't counted him there, that client as in quarter one. So maybe in quarter two we will have a better performance, and this variance percentage will reduce, hopefully. So yeah, it will close in April. So yeah, that makes sense, and it will improve eventually. So premium subscribers, of course, this is also how many we expected was 2,68,650, but we only got 2,08,950 only, which is a 59,700 variance and 22.2% variance. So of course, makes sense. I don't think I have to repeat it again, because how we much in January we plan to have 350 of premium subscribers, but we only had 280 of the subscribers. So that's the main reason what led to decline in our premium subscriber revenue. And you can see here, same goes here. In budget we had 350 subscribers, but we only got 280 subscribers, um, which shows that after third ride was not alive. February 15, once it went live, subscription code improved significantly, and yeah, it was actually improving. If you see here, from 280 we went 420, which is a good improvement here. So I think there was some problem with the in-app sales here. So we are assuming that there was some problem with the in-app sales and all. So that led to great impact on our premium subscriber revenue. Next, we have advertising revenue. So how we advertise in this thing is that basically, if we go here and if we go to assumptions and budget, and if we go to the yeah, advertising revenue, which comes in the other revenue, because it's not a direct revenue, it's an indirect revenue. Okay? So what we assumed is that we will get to 25,000 in January, 28,000 in February, and March 32,000. Okay, but actual was really less, not really less, not too much less, but yeah, it was 18,000 in January, 20,000 in February, and March it was 22,000. So that led to decline in the if we go to the quarter actual statement, and we go to the advertising revenue, it was only 60,000, whereas the budget was of 85,000. So yeah, this is a problem, and it led to the 25,000 of variance, which is 29.4%, and it's also an unfavorable variance here. So yeah, ad revenue tracks number, the more impact was the sorry the reason why we got this much less revenue was because we didn't onboarded much of the average like daily rides. Like we plan to have our app doesn't had so much active users, because the ad revenue is tracked by the number of active users who uses our app, opens our app daily. So as we didn't got so much users, so much rides So that really impacted our revenue here. Since the ride volume was below the plan, what we thought should be 210, it was only 180, meaning that our average users of the app were pretty less. So which actually impacted our ad revenue as well. And also one of the advertisers, we are assuming that one of our advertisers paused their February campaign due to their budget freeze. So that was also impacted our ad revenue. And the overall total cost of revenue, so it should be 10 lakhs 94,220, but it was 9 lakhs 10,920, which is a variance of 1 lakh 83,300. And it's a actually a positive variance if you see the total cost of revenue. Like it is we expected it to be this much, but it was pretty less than how much we expected on the quarter on budget, and it was only 16.8%. So that's actually really good, because the variable cost and all has really really good, and in like cost effective. Our variable cost were really less. This shows that comparison to the budgeted P&L. So yeah, total cost of revenue, if I compare here, its quarter one budget was this much. But if we go to the actual, we managed to save actually a lot of cost here, which is really good. And this is also breakdown of our cost of revenue. The first is the driver incentive payments, all the payments which go through drivers. Then the payment gateway fees, because most of our customers just scan and pay. So there are some payment gateways fees. We have to cover that, and it's actually variable expenses, because the more rides we get, it changes according to that. And the referral bonus, we also have a referral plan. If you refer to someone and they book their first ride, you get some bonus. Okay, so that also we give them, and it also have variable expenses to us. So this is the gross profit in the quarter one total, which is 14,959, whereas the budget it was should be 34,907, which is actually less. So it's a very unfavorable view here.